Hi everyone, welcome to the masterclass for the Retail CBDC Global Landscape. My name is Alan, and we will be commencing the masterclass very shortly. So I appreciate your patience. I think we do have quite a number of attendees still coming in. So we'll just wait a minute or so. Thank you. Okay, I think we'll get started. So once again, hi everyone, my name is Alan from the Monetary Authority of Singapore. And a warm welcome to all of you to the Masterclass series held in conjunction with the Global CBDC Challenge. The Global CBDC Challenge is launched by the MES together with our partners from the IMF, the World Bank, ADB, OECD, several UN agencies, and other partners as well. So very privileged and honored today to be able to run this masterclass. Just some background perhaps before we start on the Global CBDC Challenge. If you could move on to the next slide. So the CBDC Challenge, which was just launched in June, really focused on retail CBDC solutions that increases payment efficiency, as well as improve financial inclusion. To date, we have received over 300 proposal submissions from more than 50 countries. If you move on to the next slide. So it really represents a very good mix of ideas and solutions from around the world. So really encouraged by that. And out of the 300 proposals, we have selected, or rather the judging panel have selected 15 entries to progress to the next stage of the challenge. So we're now in the acceleration phase of the CBDC challenge, where the shortlisted finalists will be developing their solutions over the next 8 weeks to sharpen and enhance their retail CBDC solutions. So to help them along and also to encourage that continuous learning about retail CBDC solution, we are pleased to organize a weekly masterclass series where we will be inviting industry experts to give us a lecture on different CBDC related topics. So for today's inaugural session, we have the privilege of having Rafael to join us to kick things off with the Retail CBDC Global Landscape Masterclass. So Rafael is a principal economist in the Innovation and Digital Economy Unit of the Bank for International Settlements. So he has extensive experience on policies, on topics related to cryptocurrency, stablecoins, and CBDC. For those of you who have been following the work in this space, you will probably have read a version of what Rafael has published. So we are immensely grateful that Rafael has taken time to spend with us and present his thoughts, his perspective on CBDC architecture, take stock of the various approaches pursued around the globe, and present kind of the broader lessons learned thus far. So without further delay, I'll hand over the time now to Raphael to kick things off for the first retail CBDC masterclass. So over to you, Raphael, and thanks again.
Thanks, Alan, and thanks to you, Tribe, and the Monetary Authority of Singapore for organizing this masterclass and for inviting me. We had a bit of a technical problem. Trish from the Tribe will operate the slides, and I'll always have to say next slide. And it's really a great honor to present on this topic today. I really want to discuss how and why central banks are putting the big idea of central bank digital currency, CBDC, into practice. And really the basic premise is that the foundation of the monetary system, irrespective of technology, is always trust. And CBDC allow to extend this trust in new forms and offer sort of in digital form the unique advantages of central bank money, finality of payments, providing liquidity, and ensuring that central bank money is neutral, so offered on equal conditions to all market participants. And the private sector can then build on these central bank foundations in the digital age. If we could go to the next slide, I'll talk briefly about the structure of today's presentation, and it will have three parts. First, we'll sort of make an easy introduction. What is a CBDC? What are central bank motivations behind them? And what is the current state of the art, state of CBDC projects? Then we'll have, I'm very interested in having your opinions today on whether we should have a CBDC, what could be its advantages, what could be its disadvantages. So we'll have a first round of polling among the audience, and I'm very grateful that so many people have shown up today. We can see it in the chat, and it's nice to see that on the side. And then we'll jump into a second part that is more specific. It will go more into the technology and a CBDC development framework, the CBDC pyramid. We'll speak about the variety of CBDC architectures and what infrastructure, what technology can run off, how one could get access to it. And last, we'll look into the international dimension. And there again, on sort of part 2 and 3, we'll have a poll, a bit more specific that time. Sort of now we've seen, more detailed approaches. And again, it's great to collect feedback back on this. We'll like feedback on what the business models could be, on what you perceive the advantages could be. And then I'll just conclude. So without further ado, if we can skip to this slide, let's start with the very basics, the idea of a retail CBDC. So in the press or for many observers, people, because sort of the initial impulse for a CBDC often is seen as coming from the cryptocurrency ecosphere, people often associate a CBDC with a specific technology. But for central banks, it's not really. It's just a concept to make central bank money available to households and non-financial firms in digital form. Just like cash, a CBDC is a direct claim on the central bank, but like today's electronic money, it is digital. So today, only commercial banks and other payment providers have access to digital central bank money, the reserves they hold at the central bank. And a retail CBDC is a new third type of central bank money, a digital claim accessible to all. And if we can go to the next slide, this analogy to cash also makes clear sort of the very basic motivation behind issuance, the rapid shift we're seeing in retail payment behavior. Cash in circulation has been rising actually, but behind that, the actual use of cash in everyday payments has been falling for a number of years now. That can be seen from the payment diary data of a number of central banks that is shown here on the left slide, on the left panel of this slide. Meanwhile, the use of digital payment options has risen, and all of this has accelerated substantially during the COVID-19 pandemic. Here, the middle panel shows search engine traffic with keywords that combine viruses and cash. So it could be corona banknotes, virus banknotes. And we can see that for these search expressions that existed before the COVID crisis, so just virus and cash, they were actually, these searches were there, these concerns were there, and they spiked during previous pandemics. But in much in the same way that these pandemics weren't nearly as important, as severe as the current one is, also the spike in search engine traffic was completely minime. So these concerns just came to the fore in an unprecedented manner, and as a result, what happens is that in many jurisdictions around the globe, the general acceptance of cash is under threat. On the right-hand side, we can see a picture that's actually a bit older, and it's from Sweden, which sort of where the decline of cash use was very advanced. But nowadays, we can see that in many countries. And that really puts to the fore a fundamental issue for central banks, because guaranteeing working retail payments is really one of their core mandates. And indeed, if you think back in time, it's guaranteeing safe, secure, and stable value of banknotes was actually a reason that central banks around the world were founded. And cash has sustained commerce for centuries. And so central banks are naturally thinking about offering a digital complement, given that the physical product is used less and less. If we can go to the next slide, of course, we need to acknowledge that sort of while the declining use of cash and the associated need to guarantee the efficiency and the robustness of domestic payment systems have featured more prominently, there are also other motivations. And this can be seen in a survey of central bank motivations for CBDC issuance that is done by a committee hosted by the BS, the Committee for Payments and Markets Infrastructure, the CPMI. So this is a survey of roughly 60 central banks. And here we depict the results for 2018, 19, and 20. And we can see that the motivations for CBDC issuance also include monetary policy, means for monetary policy implementation, the hope to bring down the costs in payments, and this is something that's very particular, very pronounced in emerging market economies, the hope to increase financial inclusion. If we can go to the next slide, we'll see that central banks sort of have put forth a variety of motives for why they would issue a CBDC. And as sort of the economy has transformed over time and new issues came to the fore, they have also communicated much more on this topic. Here we show a graph where we have used the BIS-hosted database of all central bank speeches around the world. That's around 16,000. And we look into those that are on the topic of digital currencies. Not only do we do that, we also look at within a speech that is about this topic, we gauge, is it taking a positive or a negative stance on eventual issuance? And that would be the black line, that is the net of the red negative statements and the blue positive statements. And we can see that sort of this initially, almost all speeches were negative on issuance. The black line is in deep red territory. Over time, this sort of changed a bit, and then with the pandemic came a sea change. If we can turn to the next slide, we'll see that. Sorry, please, the next slide. Which again depicts this black line that is the same from the previous slide. So it's the net stance on issuance that, with increasing positive stance on how we communicate about this topic, central banks were experimenting more and more. This data on sort of the retail and the wholesale projects and in what state they are. Are they research? Are they pilot? Or are they even live? Is from a database that colleagues and me have assembled for a BIS working paper. The working paper is from 2020, as you can see in the source below, but we actually keep updating this database to really accurately take stock of CBDC projects around the world. And we can see here that wholesale CBDC projects, the orange area, has grown too, but where it sort of initially was 50-50 or a bit less than 50, in relative importance, the focus has shifted on retail work. So retail work has grown even more. We now see on this slide, in total, there are 73 projects. That includes there could be some countries that have both a retail and a wholesale work, so they would be included twice in this graph. If we want to look at the extent of CBDC research and development at the current state of time, we can look at the map on the next slide, where we display, as of July 1st, all CBDCs on the world, all pilots, and all research projects. The pink countries are those that have publicly communicated that they have ongoing research work on retail CBDC, which includes Brazil, Canada, the Euro area, the UK, and Russia. And the US, for example, is here there too. We're basing this on congressional testimony by Jay Powell in February and a speech by Lyle Brainerd around the same time. We have Saudi Arabia and the United Arabian Emirates who have launched Project ABBA. We have Singapore, Thailand, Hong Kong, and Japan. They have confirmed that they are doing wholesale pilots. And the red countries have completed the pilots that, for example, includes Ecuador, the world's first CBDC between 2014 and 2016. And the dark red countries are those where there is ongoing retail CBDC pilots. And certainly, of course, there are now 2 live retail CBDCs, the Bahamas Sand Dollars and the ECCB's Dcash. Let me note that you can find similar maps on the web like this. The difference here is really that we really go and look at official central bank communications. That could be via Twitter, but it has to be from the official account. And then we vet that information with the central banks, and we actually frequently find that other sources are somewhat imprecise because some governor mentioned in some speech, one could think about a CBDC in the future, but there's actually no research and development effort, and then we don't show that in our map. So here we do not include the cases of Iran, Senegal that are based on rumors. And we're also carefully to really only include real CBDC projects. So, for example, the Central Bank of Cambodia is very clear that it's not pursuing a CBDC at current, but in many press articles that is not. So that is just the relationship of the importance of this map is really that any information that you see here has been vetted with the respective central banks. So, so far on a brief stock take, we've discussed the concept of what is a CBDC, and in the next section, I'll dive much deeper into how a retail CBDC could actually be designed. But before that, let's have a little poll. If we go to the next slide and actually start the poll, how do you? So we have a couple of questions. We'll always have like 30 minutes. Some will be single choice, some will be multiple choice, and then we'll look at the results. And it's really for my curiosity at some point, and I just want to feel at this stage, without having to talk about sort of what I think are the priorities and what central banks think are. What is sort of your own opinion at this stage? How should a CBDC be designed? Yeah, please just go ahead. Well, this is quite interesting to see. It seems that those that think it should be a permissionless blockchain are way faster than the others, because at least in what I'm seeing, the first option was way ahead initially, but then it lost ground. And I think what's very interesting is sort of, right, these are very different designs, and some people, you know, firmly see a CBDC can only be this, could only be accounts for everyone, but all of them are CBDC designs. And it's really, the issue is, what are the policy goals that you want to achieve? Do you want to sort of replicate cash and peer-to-peer exchange? Do you want to offer financial inclusion? Do you want to give the private sector an important role? And you know, different, as we'll see later, actually here, different institutions around the world are pursuing different approaches, also because they start from different starting points, different level of development, and different legacy payment systems. Trish, will you end the poll or will I do that? Okay. So we see, I think now you can all see these results. 62% would think about a hybrid or intermediated setting where the central bank just provides some core infrastructure and then there are private sector intermediaries. But also the other options, right? The one where it's an anonymous digital banknote or even a permissionless blockchain, it gets quite some support. If we can go to the next question, where here we'll have more than one choices. Trish, I'm not sure if you can hear me. I wasn't talking about the next slide. I was the next. We have, oh, sorry.
Yeah, so you can see everything, Raphael.
I myself didn't see it. I was confused myself because I'm on a different device now. Potential benefits of a CBDC include, I'm actually surprised that we only have a 2%, so 5 out of 234 votes saying there are no benefits, right? I mean, one can be skeptic. I'm obviously not, but I would have expected more people to be skeptic in an audience. I think aren't they? Maybe I see in the comments that the results are not on screen. Is that? Can somebody confirm that in the chat? If somebody, okay, okay. So I think the issue is that you only see the answers to the first question, and then you have to scroll down to get the answers to the other questions. I think that's the point. Yeah. So yeah, I'm just looking at potential benefits of CBDC issuance. Here, financial inclusion, that's very important, and a cash-like resilient payment means. I think those are the two. It has to be, you know, it complements cash, so then it really has to have these technical properties. What are the downsides? And that's something, right, that needs to be considered. Obviously, you're generating a payment system in which the government has or the central bank has more information potentially, and we'll speak about that later a bit, how the design can sort of counter that. I think it's also important to think about the operational burden for the central bank. And what I think personally is actually something that we will have to think about if there is issuance really deeply is how to design them that there is actually usage. Payment systems are network effects, and it's really hard to get a new payment means going. And then this is actually the most important question, right? Some people see lots of benefits for society in the CBDC, but then when they look at their own payment behavior, it's right. It's not so clear why they would actually get a wallet and then use it frequently. So I'm positively surprised by having 37% of the answers just an unconditional yes, I would use it. Obviously, many people, and that's actually the modal entry, would say it's only if it's less costly or more convenient than other payment options. And here I'm surprised because for the consumer, payment options are already very convenient, and at least for the consumer, they're not that expensive. The merchants pay that. But what is missing in some novel payment apps are privacy, and that is maybe something where the central bank could offer some additional means. And I'm surprised to sort of see that doesn't feature very prominently in this audience. So far, to the first round of questions. So now I've received very valuable feedback. Thank you all. Let's dig into the technical dimensions. So here I'll just focus on retail CBDCs, and I'll offer a stock take of designs along a design framework for CBDCs that I've developed in a paper in a BIS quarterly review titled The Technology of CBDC with computer scientist Rainer Böhme, the CBDC pyramid. If we could switch to the next slide. Okay, so actually, I was ahead of myself. Let me first jump into the economic design. And one of the worries that we've seen the poll come out, it wasn't so prominent, but quite a number of people checked that as a concern, that a CBDC could crowd out commercial banks. And so a first issue is the economic design. And a lot of proposals have been floated, too much to cover here in the time. Let me say this much: the systemic impact can be limited, and one means is by adjusting the interest rate that is paid on CBDC, and another means is by adjusting caps on holdings. And the basic point is that we know it can be done because cash already does it. So in this slide, it shows the circulating amount of cash in select economies compared to the GDP. And it compares it also to what people hold on bank accounts. And what we can see is that compared to what people hold on bank accounts, cash holdings are really many. And that is why cash does not have a very strong systemic impact. And that is, it's good as a means of exchange, but as a store of value, not only does it have a zero interest rate by default, but it also has some properties, fear of theft, fear of robbery, that makes you want to hold money on bank accounts. And in the same way, CBDCs can be designed to retain a small footprint on the financial system. For example, we all know if CBDC holdings were as big as they are with cash today, the commercial banks wouldn't be disenfranchised. So next, let's delve into the technology dimension. Here, as I said, I will focus on the framework, the CBDC pyramid that I've developed in the paper. And the framework is really very simple. It starts by asking what consumer needs a CBDC could address. And we then sketch the development of a retail CBDC through an approach that goes through these consumer needs and two technological design choices. So on the left-hand side, we set out the needs. This starts with cash-like peer-to-peer functionality. I would like a CBDC to have some cash-like properties and function without intermediaries, but at the same time, have the convenience of real-time payments. The security, I would like it to obviously be a resilient and robust operation and not be subject to cyber attacks and or connectivity outages. And the central bank needs to decide on that part of the operational level where it gets involved in. How does it structure technology? Does it use a centralized or a DLT-based technology? Here, we also need to think about how access is given and to what extent it allows for anonymity in payments. Here, obviously, everybody would want a CBDC to be accessible as possible. Also, it should ensure privacy. But of course, people would also want it to be useful only in lawful commerce and not foster crime and terrorism. And the last dimension is the cross-border dimension. If you have a CBDC in one country, how can you pay across border, or could you actually use it if you're in another country? So these are the layers of the CBDC pyramid, and it's structured as such because some choices are very fundamental. I first need to think conceptually about the architecture. How do I want the CBDC payment system to work? Like what are the tasks that are handled by the central bank, and what are the tasks that are handled by the private sector? Once I know how conceptually what I want the architecture to be, what is the specific technology that the central bank should run to perform the tasks it wants to perform? Once I know how I'm going to make this system run as an operator, I need to think about, well, whom and how do I give access? And last, I'm going to have to think about other payment systems and how I integrate my CBDC with others. And that is the more fundamental questions are at lower levels of this pyramid. So let's really jump into the foundational layer, the architecture. What are the operational arrangements of a CBDC? What are the functions the private sector performs? And what are the functions the public sector performs? If we can go to the next slide. Oops. This is not the right slide. Can we go back a bit? Maybe you can go down too. Okay, I see there is an issue. Let's go back and I'll just describe it. So here there is one panel overlays the actual graph. Disregard anything that's blue. The big thing is with the direct CBDC, so it's a one-tier system that's fully operated by the central bank. So here, not only is the CBDC a direct claim on the central bank, those are the blue lines, but the central bank also handles all the communication with the users, like including account opening and maintenance, enforcement of AML CFT rules, and day-to-day customer service. And the central bank, importantly, for it to be able to conduct day-to-day retail payments, it also needs to maintain a full ledger of retail transactions. The only way I can really perform payments is if I know everything about all clients. So obviously such an architecture would imply a large shift of operational tasks and costs to the central bank. This would distract from the central bank's role as a relatively lean and focused public institution at the helm of economic policy. So an alternative model, if we can go to the next slide, which is correct, is a two-tier CBDC without a backup, the fully intermediated CBDC. And here we have a design where we see a CBDC is still a direct claim on the central bank. That's the quintessential cash-like feature. A banknote is a legal claim on the central bank's balance sheet, whereas a bank account is a legal claim on a commercial entity, a private intermediary. So here, the legal claim is to the central bank, but the information and the interaction at the consumer-facing side is with payment service providers. Those could be commercial banks that operate separate payment accounts, or it could be novel forms of PSP. And these perform all the operation, and the only information they pass on to the central bank are the wholesale balances. So PSP provider X says, in total, my customers hold 3.6 million CBDC units, and they just transferred these and these and these to other payment providers, so I need to put the net. And so the central bank only has a wholesale ledger of payments. That is like it has today, right? Today, the central bank only operates the wholesale accounts of commercial entities, of regulated financial institutions who have reserve accounts with the central bank. And the benefits is that it's a very simple operational setup for the central bank. But it also, one advantage is that there is no concentration of data. Just as today, the central bank does not have information on who the actual retail clients are or what the balances or individual transactions were. And so there are less data loss concerns and privacy considerations from the side of the government. Of course, the PSPs have that information. But a downside is that additional safeguards and prudential standards would be necessary because the payment service providers, they would need to be supervised so that the wholesale holdings they communicate to the central bank actually reflect their clients' retail holdings. So if a user and a merchant, they both have their account with this PSP that we depict here, how do I guarantee that what the PSP communicates to the central bank actually adds up to the joint balance of these two? There are some cryptographic techniques to do that, but they are still not yet mature ones, and they have a high computational load, so that would create delays. Another one is to, just like in today's system, trust the PSP somewhat and supervise them. But there's also a third possibility, and if we can go to the next slide. The hybrid CBDC, which is hybrid because the central bank performs an important backup function here. So just like in intermediated, all the users' interaction is with the PSP, but the central bank actually retains a hot copy of the full retail balances at some level. So it really periodically knows that the end user has a balance of 300 CBDC units. And the advantage of this is that should the PSP have a technical outage or be fraudulent, the central bank has all the information that's necessary to sort out things, and it can restart the payment system. For example, what it could do, in case you have a technical outage at one payment service provider, it just takes all those client relationships and shifts them over to a new payment service provider, gives that new payment service provider the respective information on the retail accounts, and then the payment system as a whole continues to work. So these are the three CBDC designs. If we go to a next slide here, just to give an overview, what is the balance of the private and the public sector involvement? Obviously, in the direct model, it's completely unbalanced and the central bank does everything. There are no intermediaries. In the hybrid model, both the private and the sector and the central bank do the record keeping, but the sort of the interaction on the consumer side is with the private sector. And in the intermediate model, the central bank has a very light function because it really only conducts wholesale payments, whereas the PSPs conduct all the retail siding payments. If we go one slide further, let me also note that in this discussion, there's obviously a lot of discussion whether the central bank could not facilitate other things that take various names, but they all come back to a narrow payment bank. So here we have an architecture where there is no CBDC for retail clients. What there is an indirect architecture where you have CBDC banks. They need to fully back up all the claims they give to consumers. So if consumer A in this picture has 100 claim on CBDC Bank X, that consumer can be confident that that is fully backed with reserves at the central bank. So we could call this a fully backed payment account. We could call it a CBDC backed stablecoins, or it has been called synthetic CBDC, although many central banks explicitly note that it's not a CBDC, it's an alternative to. But it's still, it might be one possible design. And in our survey that I'm going to show you, if we can go on the next slide, we actually also allow for this possibility, but it turns out that no central bank actually looks into that. So again, here we go to the stock take of CBDC designs. When we look at projects that central banks pursue, we also either read the description, or if it's not clear exactly what architecture they pursue, we go to the central banks and ask for them, so of these architectures, which one would you consider? And this is, again, it's from a working paper from 2020, but we keep updating the data, and it can be found on the BIS website. So most central banks are still leaving all options open and are undecided. But of those that have, a result is that very few are pursuing a direct approach. That is, in jurisdictions who consider the banking sector to be too underdeveloped, so they want to have an operational involvement. And all the others, they are considering the hybrid or intermediated version, or maybe a hybrid design with a direct option. So where the bulk of the interaction with the consumer is handled by the private sector and not the central bank. And as I said, none at the moment is considering the indirect or synthetic approach, where you'd not really have a CBDC in the hands of consumer. So what defines a CBDC is that the consumer ends up holding a direct claim on the central bank. But at the moment, this is not being pursued. If we can go further, I talked about the CBDC frame. I've talked about this foundational architecture, but there are other choices to be made. Is the infrastructure DLT based, or is it conventional? Is the access anonymous? Here we call it token based. Keep in mind, we use token based in the way economists use that term, as allowing for purely object identified access, or is it identified and then we call it account based? And we also ask, is the CBDC designed primarily for the domestic market or also across borders? And if we can go to the next slide, as of the end of July, here we see the rest of this graph where I showed you the architecture before. For the infrastructure, again, we see most central banks are undecided. Of those that are, the modal entries that both technologies are being considered, and otherwise conventional, centralized, and decentralized technologies are on equal footing. I want to note here that there is a trend in this graph. If I showed it to you over time, we would have seen DLT being far ahead initially, and conventional technologies have caught up. And I think that's a bit of one should keep in mind that central banks sort of started this based on sort of what they saw in the digital currency, in the cryptocurrency space, and they went to DLT first. But now they're stepping back and say, we don't care about the technology. We have some policy goals, and we should experiment with all technologies. If we think about access, we see an interesting development. We see, again, most are undecided, but of those that are decided, full identification and anonymity are on equal footing. And actually, the modal option is now one where the system would require identification for smaller payments, and then would require identification for large payment, and then allow for anonymity for lower payments and lower balances. And that is, again, is a trend where we increasingly see these designs being pursued. If we go to the interlinkages, we see a trend towards the international dimension coming to the fore. Had I shown you this graph like a year ago, all projects would have been focused on the national dimension, but international dimension is now really coming to the fore. And here I want to focus actually on this aspect because it's very interesting, and the BIS Innovation Hub takes a very special role in this. If we can go to the next slide, I will. So here, central banks are really looking into so-called multi-CBDC or M-CBDC arrangements. And the merits of CBDC are simply very visible in the cross-border context. And the idea is that CBDC could allow to transition away from today's system of correspondent banks, where a payment has to work its way through the balance sheets of multiple intermediaries, and towards a system where a direct claim on one central bank is exchanged with a claim on another central bank only in a single FX transaction, so passing through one intermediary only. And of course, there would be more intermediaries involved, but those wouldn't never have the client's funds on their balance sheet. They would just handle the communication. And if we can go to the next slide, the specific technology that central banks are looking into are so-called multi-CBDC arrangements. These can join up CBDCs across borders and mitigate these frictions. And there are many frictions in today's correspondent banks. They come from opening hour differences. They come from small markets. They come from different communication standards. And one general advantage is that new arrangements would be built different than where today's payment system comes from. And it comes from the 70s and 80s, where small value international payments were simply not a focus of anybody. And today's system would start from a clean slate, unburdened by legacy arrangements. And there's a variety of MCBDC models. In a paper, or also in a stock take, we look at 3 different. Here, as I'm nearing the end of my talk, let me focus on one with the greatest potential to improve cross-border payments. And that is really if multiple central banks join up multiple CBDCs in a single MCBDC system, this system would be jointly operated by these central banks, and it would host multiple CBDCs. So it would not be one overarching currency. It would be different currencies that live on a single system. There would be a single rule book and governance arrangements. And national central banks would have to mutually recognize ID schemes. So if I am able to be in a payment system in country A, I also am automatically granted access in country B. The single MCBDC system is an option being considered in a couple of projects of the BIS Innovation Hub, like the Project Jura, MCBDC Bridge, or Project Dunbar. Let's zoom in on these on the next slide. It's Project Dunbar that brings together the Reserve Bank of Australia, Bank Negara Malaysia, Monetary Authority of Singapore, and South African Reserve Bank with the BIS Innovation Hub, and to test the use of CBDCs for international settlements. And it's led by the Singapore Center of the BIS Innovation Hub, and it aims to prototype a shared platform for cross-border transactions using multiple CBDCs, allowing multiple financial institutions to transact directly across each other with different digital currencies and across borders, and eliminating the need for intermediaries, and hopefully to cut the time and cost of transactions. So here, the discussion of international dimension more or less rounds up today's deep dive into the stocktake of retail CBDC design. But it's again time to hear your opinion on the matter. If we can go to the next polling. Now we've prepared some follow-up, like looking into these specific architectures, which ones are the ones that are preferable. If we look at the economics, what should be the guards against disintermediation of banks? What should be the cost recovery business model for CBDC? How should we deal with privacy and data arrangements? And last and overall, for society as a whole, do you see the issuance of a retail CBDC beneficial? Yes or no? And I'm very looking forward to see the results here. So I'm very much looking forward to seeing the results here. As of now, we had 215 people completed the poll. There are still 100 people who are in this presentation who have not yet completed. Maybe we could slowly wrap it up.
Yeah, I do need that.
So we can see now the results are in that these two-tiered versions of CBDC are way ahead. These are also the ones that sort of me and the PS actually in its annual economic report are championing. The hybrid and the intermediate CBDC, I think that's also a design space in between. But it's very interesting to see here that the one with a central bank backup function is actually the preferred option among the audience. What should be the guards against disintermediation of banks? I find it interesting that the caps and the soft caps and the zero actually are on par, because we need to, right, what we need to be aware of that if we have person-specific caps, then obviously the system needs to be fully identified, because you can only have these systems that allow each person to have 2,000 units of a CBDC if you know exactly what a person is and that a person is only uniquely present in the system. On the cost recovery business model for PSPs, I'm very surprised, because a system financed by the central bank or seigniorage is obviously something has to give, and it would have some repercussion for taxes. But what surprises me the most is that not more people have said fees paid by consumers, because if we think about this, we don't pay for any online payment that we do, but the merchants pay 2 to 3%, and that is a bit of a market distortion, because the merchant has a variety of payment options, and some are cheaper to the merchant than others, but the consumer doesn't see that, right? For the consumer, the payment is always free. And I think we could make the payment system more efficient, actually, by levying the fees on the consumer, because the consumer makes the choice of the payment means. What is your preferred privacy data arrangement? We see this sort of actually, that this is very reaffirming. The mix of anonymity for small and confidentiality for large transactions is actually the preferred option. And I think it's a very realistic approach, and it is being the one that's pursued. So it's very nice to see that confirmed among the audience here. And then for society as a whole, issuance of a retail CBDC would be, here we are in this audience, obviously we seem to be CBDC proponents, and basically the vast majority of people thinks it's somewhat beneficial or strongly beneficial. And that's nice to hear as somebody who works on these issues. So let's maybe stop this, if we close this poll and go to the next slide. So we're almost out of time. I just wanted to advertise everything I've talked about here today comes from analytical work that we've been doing at the BS. We are doing domestic and international stock takes. We're conceptualizing CBDC technologies and architectures. And we're also looking at the broader policy debate and the centrality of data in the digital economy. Just Google me and my co-authors, and you find these papers. And with that, we may already be out of time. Let me just conclude here and thank everybody and guide everybody. No, actually, I want to show the last slide. Let me guide everybody to the BIS annual economic report of this year, where we had a special chapter on CBDCs and opportunity for the monetary system, where we talk about these issues, but we also really talk about the broader policy debate, the question of identity and privacy in the digital age. And I think it's really a worthwhile read, this chapter, and it's a catalyst of all these topics that I've touched upon and more. With that, thank you very much. It was great discussion. Unfortunately, I see there is like 100 questions on the chat. I'm only now seeing them, and I'll try to answer some, but I'm also afraid that we'll be kicked out of this session. So thank you a lot. Feel free to email me. We will be sending this presentation. I know that there was one mistake, so we won't be doing that right away. And we will also, I will use the results from today's polls, obviously not connected to any, just the average statistics. For future reference, it was a learning experience for me too, and I thank you very much. And I hope we see each other again, likely in a virtual format, and maybe also in person. Thank you very much.
Thank you very much, Raphael, and thanks everyone for joining this session. So I think it was a very, very insightful, and a round of virtual applause for Raphael, and thanks again for sharing. So again, feel free to connect with Raphael and follow, I guess, his social media post, and subsequently, I think we'll make available the presentation. I think, Raphael, you'll make that available, I guess, through LinkedIn and otherwise. So I look forward to that. Well, this is the first of a series of Masterclass. So we look forward to your participation in the coming series. So coming up next week, we have the privilege of having Harish from the World Bank. So he will be talking about interoperability and coexistence of retail CBDC with existing payment ecosystem. So we have the QR code there, same time, 9 p.m. Singapore time. So please sign up using the QR code, and hopefully you'll be able to join us next week for another topic in the ongoing series in support of the Global CBDC Challenge. So thank you very much again, and have a good day and good evening for some of you. Thank you.